A lot of times for those stocks that are what I think are the elite stocks, and I don't put Chipotle in that category right now. 10 years ago it was, but right now I don't put it in. But for those kind of elite stocks, I'll take a chance and try to buy a little bit in the morning just to start that position, and then hopefully slowly build into that position over the next week or so as it kind of settles down and pulls back and things like
Hmm.
that. But this one, yeah, the way I usually will handle is I'll use the low of today and a couple of percent below it as my exit strategy. And so you're still using, at most 8%. So the key for these kind of things is you just have to make sure that you're not buying more than 8% above the low, or really 6% above the low if you're using 2% below it, because some of these can get really extended from the lows, and that's a long ways down to test to see if it's going to hold. uh, there'll be plenty of times where you'll miss some of these where because they just take off immediately, so just put it on the radar.
Right.
This one is, put on the radar, watch it closely over the next couple of weeks. Let's see if it settles down, and it might give you a chance to
Hmm.
get into it. But I'm really more interested in this stock more as a gauge on the market. It's like, okay, how are they treating so far? This is a nice strong move up. How are they going to treat this? And that will let me know over the next few weeks about just the overall environment. If this can
Hmm.
hold up, and you start seeing a lot of these earnings gaps hold up, that could tell you that, okay, the investors, the environment is starting to reward more growth type of stocks, or more risk taking, and so that could bode well for all of our stocks.
Right. So, what's the reason why you would not put this in the elite stock category?
It's just not one of the. It's already changed the world in many ways, right? Now it could now for a stock like this, it's not like it isn't a great company. It's a stock like this is more. I'd wait more for a pullback for it to settle down, maybe pull back closer to the 50-day or the 21-day moving average, because it's already grown so much. And I just don't have the confidence that's just going to grow at this scale that's going to blow Wall Street's expectations away. A lot of times that's what adds to the power, is that some of these companies are just growing too fast that it's impossible for anyone to really wrap their heads around how big this company can get, right? And that's where you get the consistent buying. That's where you get these rapid run ups and things like that. Chipotle had that in 2010, right? I mean, you can just go and study that using the change date on MarketSmith,
Hmm.
and things like that, and when you have time. But Chipotle broke out of a beautiful couple of handle in 2010, and then when they reported that next earnings, they did a gap up like this, and then it just took off, and it just kept crawling up, and that was an indication that Wall Street did not understand how fast this company was growing, and that everyone, including me, was going there every day and willing to stand out in lines for 20 something minutes to get their lunch. And so they've already kind of done a lot of that. Now they'll still grow. They'll still grow well, but it's just not in that kind of new type of stock anymore that we generally look for.
Okay. And then you said if it was in that elite category with the earnings gap like this, you would start out with a little bit and then try to add to it if it settles down, pulls back. Can you quantify a little bit for us? Would it be a half position, a quarter position? What would you go with?
I mean, a lot of times it might be 2% to 5%. Um,
Okay.
so like if a normal position is like 20, like a good position in a good market's 20%, right? For even 15 to 20%. This is only 2 to
Hmm.
5%. So you're trying to, and then with the hope that over the next week or so, when it pulls back and stuff like that, I'll just slowly try to add more. Now, sometimes when you're in great markets, they just take off, and you're like, oh, great. But so then you have to wait.
Mhm. Okay, thank you so much for that, Arusha. Chris, I want to get your take on ASML. If it'll pull up, there we go. Okay, so ASML up 2.8% right now, and its earnings report came out. It looks like, deceleration, but still strong numbers: 49% bottom line growth, 28% top line growth, and some nice action in the stock today.
Yeah, it is. It just doesn't seem real actionable to me. I mean, it reversed yesterday, so it would have been hard buying it ahead of time.
Right.
How, let's see, it's around 703, and what was yesterday's
Low
50-day?
or yesterday's 50-day 675.96.
Okay, so we'll call it 676. So yeah, it's about 4% above the 50 days. So if you're, hot on this, you could buy it here and you'd be risking about 4%. And if it came down, actually probably closer to 5, I think, once it, if it undercut the lows from 2 days ago. So that would be your risk there. Ken was pointing out that it's already had a few tests of the 50-day already. So it just might be, and although that yeah, on the weekly, the 3 weeks tight area, I mean, altogether that kind of looks like a flat base in there. So even though it kind of popped out of it and pulled back, so it's actionable. I'm just not feeling like like I'm ready to jump on something like that right now.
Not at the top of your list.
No.
Well, what about NVIDIA? NVDA continuing higher after coming down to its 10-week line, up over 5% for the week. And if we flip on over to a daily, we can see it's up 3% today. It closed pretty well yesterday.
Oh, yeah, that looks good. I might add some more shares here today, because I bought it 2 days ago because it was just showing such great strength when the market was selling off, and just felt like, okay, it's not much risk to the bottom of that bar, and it's working so far. So yeah, I like that.
So how big of a position did you go with 2 days ago, and how much would you be adding?
It's about maybe a 4% position, so maybe I might add another 2% to it. How's that?
It's helpful for the audience to know. They love knowing that. And right now it's about 5.5% above the 10-week moving average. So can you just help us learn more about kind of the risk that we're looking at and why we look at how far a stock is above the 10-week?
Yeah, because if it reverses and closes below the low of this week, then that would, not look good on the chart. That would be a sign of failure. So if you take the low of the week, which is right around the